the volatility that we've seen in this asset class, you say it's not stopping institutional investors from holding cryptocurrencies. Tell us why.
Hi, Sammy. Thanks for having me. Look, yeah, I'm just sort of anecdotal evidence that there are family offices, there are endowments, there are others, who are looking and have been sort of exploring and studying this asset class for some time. And the volatility is just par for the course. I mean, it is, an unfortunate sort of reality, if you like, of how something like Bitcoin is introduced to the world, and inevitably it's going to have this volatility. And so you've got a number of institutions that continue to look at that, understand that, and are figuring out how to work it into their portfolios. That's certainly, what institutional traders and others are telling us. But I think it's also important to look at what's happening on the sort of the broader investment side. I mean, there's been phenomenal amount of investment in the servicing aspect of the crypto industry. Andreessen Horowitz just last week announced a $2.2 billion crypto fund. So you're still seeing a lot of, corporate, institutional, mainstream money coming in broadly into the sector across a range of different vehicles. And I think that ultimately supports it.
We've seen sort of division between Ethereum and Bitcoin in terms of performance this year. I'm wondering why you think that is.
Well, it's interesting. They do tend to move in lockstep to a large extent, but there's actually this sort of pattern in which one leads and then the other one follows. Ethereum is a different value proposition. It is not to be thought of, I don't think, as a competitor to Bitcoin. A lot of people do think that, and a lot of people inside crypto do think that. But Ethereum really is it's a form of fuel. It is a commodity that is used to run the Ethereum network, which people should understand is a smart contract-based system for decentralized applications, whereas Bitcoin is thought of purely as an asset to hold, an asset to use as a form of digital gold. So they're quite separate. I think the market tends to lump them all in together, and then maybe at different times we'll sort of favor one over the other depending on what the mood is. But at the end of the day, they do tend to have patterns that move them, over time, at least in lockstep.
And it seems like the regulation story is what continues to derail Bitcoin, whether you're talking about 2015 when it was Janet Yellen, or fast forward to now where it's not just the U.S. but China cracking down as well. When are they able to craft their policy around cryptocurrency so that can become less of a risk? Where do you think we're at?
Oh, look, it's still a long game, and not only because of the fact that it's Bitcoin is just one part of this, but there's so many other components to it. Of course, we've seen the emergence of stable coins, which feed into the crypto network. We've got the emergence of decentralized exchanges now that are a challenge to the existing centralized exchanges, and so governments have just got their head around how they will regulate those. And now there's a decentralized version of that. This concept called DeFi feeds into this as well. So I think it's an ever fast moving, changing, highly innovative sector. And as a result, you're going to find governments everywhere are constantly scrambling to keep up. So I don't know that we'll ever get to the point that, regulatory risk or the idea of, the uncertainty around regulation is going to go away. It's an inherent part of what's going on.
Yeah, that regulatory risk is something that investors at least have to kind of get used to, if you will, when it comes to Bitcoin and cryptocurrencies. Michael, thanks for providing your insight today. Michael Casey.
Shepard Smith here. Thanks for watching CNBC on YouTube.